Okay, so I've had a few people ask me to talk about stop loss and how it works, and how it can be used to help you prevent you from losing money in volatile markets. I've pulled up a football game that's happening tonight just to demonstrate the stop loss. Genuinely, I don't really use the stop loss in football markets as they're not as volatile. You need to remember one thing though with the stop loss: it does not guarantee that you will not lose money, as it will only activate once a penny has been placed on that price, matched on that price. So a £2,000 bet could come in before your stop loss will be activated, and it could smash through that, leaving you in a negative position. So it's not just a place and leave, you have to monitor it. Stop loss is on the left hand side of your screen in the tools section. You've got a couple of options here. You can choose a single horse or team to set the stop loss on. I genuinely have it all on all the field. You can choose it to be 10 ticks, that's my normal, or percentage, but the percentage doesn't always seem to work correctly, so I stick to the ticks and then I adjust it to where I need it. Now I'm going to take you through all the options, but I'm going to show you exactly what it does here. So let's just put a £1 bet on the back side of this market. Now you see right away, oops, sorry, I didn't have that. Sorry, I didn't have the stop loss activated there, so I just need to press the tick this box here. Let's put my £1 bet in on that side of the market. You see right away our stop loss appears up here at 2.56. So as a trader, we would then choose our out position, and there's our two positions in the market. In the positive move, where we've already been watching the market and we understand how the market's moving, we'll be looking for it to bounce towards our target. The likelihood is, as you can see here, we've got a resistance point of 2.3. So as a trader, we would know it would be best to put it in front of there. But we're not looking at that side of the market today. Today, we're looking at the negative side of the market. What happens if the price goes the wrong way? So we've got our stop loss here. As I mentioned, it will only activate once a penny has been matched here. Once a penny's been matched here, it will throw your bet into the market, but it can smash through that. So you have to watch it. Watch your profit and loss at the top and remove it if required. Now, if you're not quite happy where your stop loss is, or you don't want to take, you've decided you don't want to take that much of a risk, you can just simply move it by right clicking where you want to move it to within the market. And that allows you to move the stop loss around and choose your positions. Now, I do this during the race. If I see the horse has gone forward a little bit too far, but do you know what, it's going to burn itself out, I may have advised 30%, but I may push out to 35% just to give myself that edge. But as a trader, I still always have the exit point where I'm happy to take the red if required. So if we just get rid of this trade at the moment, so let's just trade out of there. And we right click to remove the stop loss there. So next we're going to look at the trailing and hedged together. This is what I normally use when horse racing. So I would place my lay bet. I normally do lay to back. Let's get this up so we get some money taken. Now you get this H here. So what that means is going to take the money on the right hand side at that point, whatever it may be, it will hedge your loss across the field. Again, as a trader, we've already put our entry point further up the field. But with this trailing stop loss, if the price goes up to 2.42, our stop loss will automatically move up to 2.22. Now, this is superb in horse markets because as a horse drifts out, we're quite happy to let it keep drifting, because it's going more and more towards our loss. But we may get to a point where the price is somewhere in the middle here, and we go, you know what, let's move the stop loss up to 2.42, and that gives us the opportunity to either have a scratch, no risk, or take all the profit that we were looking for. But as always, it does not guarantee you will get out of the market. What it does is gives you the opportunity to get out the market if the market is moving at a slower pace. At times you have to take a slightly higher loss, but be aware, it's smash past your stop loss, take that red, walk away there with a bloody nose rather than bankrupt. I hope this video helps everybody. If there's anything I haven't covered that people want to learn about, stick in the comments down below, and I will get a video out in the next couple of days.